Hey everybody, happy Friday. So, we have great news when it comes to interest rates and not such great news when it comes to some of the guideline changes for FHA. So, let me start with the great news. When it comes to the interest rates, we are seeing a lot of declining in the mortgage rates. One of the things that we like to look at it's the 10-year treasury. And this is the chart of the 10-year treasury. If you see since about January 15th, the rates have been steadily going down. They went up a little bit in February, but now, especially since March 28th, we've seen a decline in these rates. We expect this to continue to happen for a little bit. Now, we're telling our clients to be cautious, so we're trying to go ahead and protect our clients that are under contract, especially today, and maybe we're going to see how the market reacts to Monday. But definitely, while a lot of us are getting hurt on our 401ks and on our stock market, at least there's a silver lining that the rates are actually going down, and they're going down substantially. We're seeing a decrease of about a quarter to a half a percent down, depending on the type of loan that we're doing. The other thing is we are now able to offer what's called a lender paid buy down. A lender paid buy down is that we're not only going to take whatever the rate would be for somebody today. Let's say that somebody would get a 6.875, but we, as your lender, we will be able to finance a buy down, meaning 1% drop from there for at least the first year. So if somebody right now would be at a 6.875, we can finance for them, we can fund for them a buy down and get them for the first year at a 5.875. That's super exciting. Make sure that you say that to your clients. Okay, so those are the good news. The bad news is what happened with FHA. I sent an email to everybody, but I want to reiterate this. FHA said last week that starting in May 25th, they're not going to accept anybody that is not a US citizen or doesn't have a green card, meaning people that are here with a work visa or people that are here with an employment authorization number are not going to be able to get into an FHA loan unless they get under contract before May 25th. And again, they don't have to close by then, but they need to get under contract before then. Now, what happens after? They will be able to buy a house, but they have to go with a conventional loan. The down payment is actually about the same. It's 3% if they're first-time home buyers or 5% if they're not first-time home buyers. But the mortgage insurance is going to be more expensive and it's going to be harder for them to qualify. Now, if they have excellent credit, 760 and above, mortgage insurance will not be a problem. But still, it's a little bit harder to qualify. You cannot qualify for that much more of a home based on debt to income ratio. So there's a couple of nuances. My advice right now, tell every single client that you've talked to in the past 12 months and now it's a great time because we are at a place where this is still a buyer's market. So there's still the opportunity to get concessions, but the rates are starting to come down. So tell your buyers to get in the housing market before it heats up and sellers are not necessarily in the need to give those concessions.